Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Do you love precious metals? If so, make sure to hit that like button, smash that subscribe button because I will give you the newest, latest, freshest, most up-to-date, recent information in the world of gold and silver on a daily basis. So with that said, let's jump into the video. So the gold to silver ratio is a perfect tool to gauge whether gold or silver is the better, more profitable investment. Historically, the ratio is around 50-60 to 1, right? Every 60 ounces of silver equals 1 ounce of gold. Do I agree with that ratio? No, it should be much, much, much smaller. If we're going back historically several hundred years, the ratio's around 8 to 1, 16 to 1. So it's extremely low. But nowadays, the last decade, the ratio has been fluctuating higher and higher. Since mid-March, we saw it as high as 125 to 1. Now, what that means is gold is overvalued and silver is undervalued. Gold is overpriced, silver is underpriced. So knowing that, wouldn't it make more sense to buy the undervalued, the underpriced metal? Because the gold to silver ratio will correct, and it has been correcting since March. Now it's down to 72 to 1, which means silver has drastically outperformed gold in the last couple months. So this article is talking about why the ratio has a long way to go on the downside, meaning that silver is going to continue to keep outperforming gold. So meaning there's more profits, more opportunity, more potential investing into silver compared to gold. I know a lot of people love gold. It's the royal metal, right? But when it comes to the statistics, silver is a much smarter investment. That's why my name is Silver Slayer, not Gold Slayer, right? So the link to this article will be in the description if you want to check it out yourself. So the gold to silver ratio still has more downside, boding well for silver prices. The gold to silver ratio's level alone cannot determine what will happen to silver prices. The fundamentals are the primary driver. If silver is undervalued relative to gold and the fundamentals line up, as is the case at present, an upward move in silver could be quite explosive. So not only are they saying that silver is going to outperform gold, but it could be explosive. Historically, the gold to silver ratio has had a tendency to overshoot on both the upside and the downside, which suggests that there's still a long way to go before the ratio stabilizes. So this silver bull run, this silver rally is far from over. It's actually just the beginning. So if you think that you missed the boat, I'm here to tell you that you haven't. The boat hasn't even left the dock yet. So here's some chart stuff. So this is the monthly gold to silver ratio price chart for the month of July. You can see the ratio is still fluctuating downwards. You got to remember, in March it was 125 to 1. So the silver price has significantly been underperforming the gold price in recent years, with the gold to silver ratio between the two metals in a rising trajectory from 2011, when silver hit record high levels, until just recently. So that was in 2011, silver was $50. So something recently has been happening. The ratio has been at extremely elevated levels in recent years, highlighting silver's low valuation relative to gold for an extended period of time. In March 2020, the ratio hit a record high, which I was talking about. The ratio has corrected from those record high levels, but is still at elevated levels, suggesting more potential upside for silver prices relative to gold. Now, it should be understood that there is no magical number at which this ratio should stand. There are no physical, geological, chemical, electrical, financial, or other reason why gold and silver should be expected to trade at a given relationship to each other. And that's so true. Let's stop there for a second. Gold and silver are completely different metals used for completely different things, are completely different markets, and are used in the world for completely different reasons. which means the prices are affected by completely different things. Gold is a monetary metal. Silver is a monetary metal. Gold is not an industrial metal, but silver is. So when the economy's in bad shape, gold and silver benefit because people are transferring their money out of fiat currency into precious metals as they lose faith, lose trust in banks and governments. But when the economy's in good shape, gold isn't benefiting from that, but silver is because it's an industrial metal. So when the economy's in good shape, money's flowing around, businesses are on top, silver being so intertwined with technology, with so many things that silver is used for, silver still benefits. So it's a win-win situation on the side of silver. So the strongest influence on the price of silver is investor interest in the metal. And while investors will look at the relative value of the two metals as one of the factors that influences their decision to buy or sell silver, their interest in the metal is driven by macroeconomic factors as well as supply-demand factors. If these fundamental factors do not favor silver, they are unlikely to purchase silver only because it is a relatively undervalued asset. That said, if silver is undervalued relative to gold and the fundamentals line up, the upward move in silver could be quite explosive. That is where we seem to be at this time. The pandemic-driven recession is expected to have a lasting negative impact on jobs, commercial real estate, and air travel. Political risk is elevated with the upcoming U.S. elections, Brexit, and deteriorating U.S.-China relations. And that is something that a lot of people have overlooked. I've talked about silver exploding since last year, before the pandemic, way before the pandemic. I was talking about this year being an explosive year for silver, and that was simply and solely because of the 2020 presidential election. But now we also have a global pandemic on our hands, so the 2020 presidential election could only be the icing on the cake to really set the storm forth, right? If you want to talk about the perfect storm, the stars that have aligned, silver is a ticking time bomb waiting to explode. So while many investors look for the gold to silver ratio to converge towards its long-term average, in reality the ratio swings significantly away from this average. The long-term daily gold to silver ratio stands at 65, right? However, the ratio has swung from a low of 16 in January 1980, when silver was $50, to a high of 126 in March 2020. It should be pointed out that the ratio stood at the 65-to-1 average only very briefly, around 7 times since 1972. It is not that price ratio hovering around that average. So it stands at 71 at the time of writing this report, putting it around 8.5% away from its average. However, given the tendency of the ratio to overshoot this average both on the way up and on the way down, there seems to be a lot of juice left in the silver price rally based just on this metric. So silver is still extremely bullish. Given the tendency of the ratio to overshoot the average, and given that the ratio is now declining a trend, it should not be surprising to see the ratio slip to at least a low of 35 before stabilizing or moving higher. So that's a long 35, a ratio of 35-to-1 would mean silver is going to explode at least to the $50 level. At least $50 level. Because you got to think, yes, right now, $50, it wouldn't, if you were going to apply that ratio to today's times, it wouldn't be. But you got to remember, gold is also going to also going to be moving up with silver. So if gold hits $2,500, $3,000, for the ratio to be 35-to-1, silver would also have to rise as well. So if both metals rise, which they both do, they correlate off of each other in price trend, it's going to mean silver is going to go a lot higher. So this level has been a strong historical support level, as can be seen in the chart. If this were to occur, if the positions, the ratio for a gain of another 50% from present levels, the price of silver could rise more or less than this 50%, depending on what happens to the price of gold. In addition to the bullish picture that the ratio paints for silver prices, the metal also has the support of investors, driven by the relatively grim outlook for macroeconomic conditions in the coming years. And this is true. The economy is only going to get worse, worse, and worse. The dollar's only going to decline downwards, right? And the pandemic is far from over. It's going to take several years to recover from this. So here's the conclusion. So we can see that silver has a lot going for it right now, both fundamentally as well as in relative terms to its sister metal gold. We have seen that historically, silver has outperformed gold on almost every occasion in a gold and silver bull market, 6 out of the last 7 times. And as was discussed in the first part of the series, it looks set to do this again. It should be kept in mind, as we discussed in the second part of the series, that the strong return in silver comes with significantly higher risks. And that's true. It's like gold on steroids. It's going to hit higher highs, but it's also going to hit lower lows. So if gold's going to rise 15%, silver's going to rise 25, 30%. But on the other end as well, if gold's going to drop 10%, silver's going to drop 20, 25%. So there's greater reward, but there also is greater risk. But when it comes to precious metals, there isn't much risk because you're transferring your fiat money into real money, right? Money's something that cannot be created nor destroyed. That's precious metals. Fiat money isn't worth anything anymore. It's not backed by gold and silver anymore. So when you're buying silver and gold, you're just trading fake money into real money, right? Something that has no intrinsic value, that's based solely off of belief and faith, how many people think that dollar has value, and you're transferring it into something that actually has value. No matter who says that 1 ounce silver coin is worth what, the real value of it isn't the spot price attached to it, it's the metal content inside of it. See, the dollar can only go off of spot price, off of that mentality of how much people think it is. But gold and silver has real value. That 1 ounce coin is always going to have 1 ounce inside of it. Regardless of what people say the spot price is, the value of the coin is never going to change. The value of the dollar is ever changing, right? So I hope I broke that down well for you guys to understand that. Now, if you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. The link to this article from Seeking Alpha will be in the description. Make sure you subscribe, because like I said in the beginning of the video, I post daily videos every single day, giving you the latest update in the world of gold and silver. Also, make sure you subscribe, because not only do I post daily, but I do a lot of giveaways. I do a lot of different types of content, right? Sometimes I'll do article type stuff that I break down and dissect. Sometimes I'll just post a video sharing my own thoughts and opinions on the markets or where I think prices are headed, or whatever the case is. I made another video earlier today talking deeper about why silver is so explosive. I definitely recommend you check that out as well. So with that said, I'm going to wrap this video up here. This was Silver Slayer. Thank you for tuning in. I'll see you guys soon.